And now we're going to an interview with my guest here, Saurabh Gupta. Saurabh is the co-founder and board member of the Vistas Media Acquisition Company. That's a NASDAQ-listed SPAC, a special purpose acquisition company, which has a lot of interesting features for impact investment. We'll be hearing about that in just a moment. The talk of the town really is the exciting merger of Vistas with Angami, which Bloomberg describes as the Spotify of the Arabic music scene. So very topical, but we're going to be talking in particular about the use of SPACs for sustainability investments. Because earlier this year we witnessed the first sustainability SPAC being used in Europe, and that's the third of its kind since 2020. And assets that are directed to environmental and social impact are on course to exceed $53 trillion by 2025, according to a Bloomberg intelligence report. And many think that SPACs are also eyeing acquisitions on ventures that focus on ESG. So, Saurabh, let's go over to you with the first question, please. Just explain to us, what are SPACs and how do they differ from, for example, an IPO?
Okay, SPACs stands for Special Purpose Acquisition Company. They're also called as blank check companies. Essentially, SPACs are sponsored by a founder team, and the investors who put in money in a SPAC back the founder team and the management and the board to be able to identify a good target to achieve the de-SPAC objectives. Unlike a traditional IPO where a private company is seeking capital, of course, but has to go through the entire process of doing a roadshow to raise that capital for the entire filing process. And also timing plays a very crucial role for a good sized private company, because if the market conditions are not favorable, then they will probably delay this IPO. And it's happened in the past when certain geopolitical issues were there, and or the stock market by itself was not very conducive for having a listing done. So we've seen a lot of IPOs, the general IPOs getting pushed last year as well, especially during COVID. But SPACs essentially, as I mentioned, raise the capital in advance from investors, put it in a trust account, and then the sponsors and the management team and the board identifies a particular target through a very, very robust and strong due diligence process based on the theme that they follow, and then identify the right target to merge with, and offers the opportunity for the private entity to go public through the capital which has already been raised. So that's the main difference.
Thank you, sir. What are the key drivers behind the recent surge in SPACs?
The recent surge, actually, to be very honest, not many people probably know this, but SPACs have been there for over 20, 25 years. And 2019 saw close to $13 billion of IPOs that happened, which was quite high compared to its previous year. But 2020 was a year when things became more global in terms of people knowing about SPACs, which almost the whole year, the total amount was close to above $80 billion. And this year, in the first 3 months itself, it's crossed about 70 billion. The popularity of SPACs is also driven by the fact right now that the interest rates are fairly low, or rather near zero. And a lot of investors who invest in SPACs are looking at alternative ways of generating the yield that SPACs do offer for the investors who come in the IPOs. Essentially, when our IPO is launched, the investors who put up the money in the trust account are getting shares and warrants, and these benefit them to achieve their respective funds targets when the deals are announced. So that has actually caused a lot of practically the surge in IPO and the SPAC market in the last 18 to 24 months. So that's something. And now, because of the fact that it increased in number, for example, the turning point was in August, in fact, or July, when Bill Ackman had announced his $4 billion SPAC. That news reached the entire world. And being in Asia and being in Singapore, a lot of people didn't even know what SPACs are before that particular announcement. And then, of course, a week later, we announced our SPAC, which was fairly small in size compared to his SPAC. A lot of investors, bankers in the Asian region started knowing about SPACs. And now you see a surge of Asian SPACs, which are coming out, sponsors from Asia who are listing on NASDAQ. So it's become a global phenomenon practically in the middle of last year.
And what are the disadvantages and advantages, the pros and cons of the SPAC model?
That's a good question. I would say the advantages are different for each stakeholder. There are different stakeholders in a SPAC. There's sponsor, there's the investors. Targets particularly who are getting de-SPAC can focus on business and growing the business and outsource the capital raise process once there's a good match. The initial investors who come in the IPO get early access to deals, and public investors, of course, get another interesting company to invest into, and they can look at these targets being brought to the capital markets where they can hold on to the positions and over a longer period of time, so less speculative. Disadvantage is, I would say it's very subjective, Andrew. Nothing that spans across everyone, to be honest. But you do have to have strong investment thesis. And in the past, you would see a lot of general SPACs, which wouldn't have a specific theme or thesis, but would look at target across sectors. But now that's become very important to run a successful SPAC, because there are just too many people to disappoint if you don't have the right de-SPAC and the right companies.
How do you see the role of SPACs in sustainability and impact investment?
So that's another good question. As I mentioned, SPACs are not specific to a particular sector, but ESG, as they call it, has become very important theme. And I wouldn't say it's limited to only SPACs, frankly. All investors and companies have to be prudent and in promoting the malpractice towards sustainability goals. SPACs are a great vehicle for sure to back the biggest, if you can say, flag bearers of ESG. And in fact, I would say Chamath, who's like the biggest person in the SPAC world right now, having done so many SPACs, is a great role model. I think that's what people need to take away from him, more than the number of SPACs he's done, that how he has promoted this theme as well. And it's going to last because this is becoming a very important topic, and SPACs have the capability of identifying targets which promote this sustainability goals. So that's definitely going to be driven by that going forward. We have seen examples of a lot of EV SPACs, and that clearly shows that of course, it's also generating returns for investors, and that's where the you can say the automotive sector is moving to. But we'll probably see a surge in SPACs in the renewable energy space, in other in businesses that are following this practice.
And what does this boom in SPACs mean for technology in good investing?
Good investing. If I understand what you mean by good investing, see, tech is just a tool, and that can evolve over time and create entirely new ones. Over a period of time. See what SPACs are doing for electric vehicles, as I mentioned. They can do the same for clean energy, nutrition, consumer products that are considered green commerce these days. Everyone, I think, talks about backing new and revolutionary ideas. And this is the chance SPACs have, to kind of back these ideas and take them to the public markets, where investors can then further back them, with the patient capital kind of approach.
So how can the MENA markets attract SPAC investments?
I would say business is business. It has no boundaries as such. But MENA is just a very good example of why. If you see the last few, maybe 18 months, a lot of initiatives have been taken in the MENA region. And one of the reasons why we like this region is growing very strongly across. And it is a big region. Of course, there are over 16 odd countries from in the Middle East and North Africa, with different nuances, different peculiarities, and different growth rates. The consumer population here is growing. The younger generation, the population is growing at a much faster pace. So tech is a very important business which is going to grow in this part of the world, having a larger percentage of younger population. I think our investment in Angami reflects this belief that we need to back a region which is growing, which is wanting to become more global. And while the entrepreneurs in the region, cater to the local needs, the capital from the global investors, such as SPACs, can actually help that those founders and those technology entrepreneurs or even non-tech to go all out in the world beyond the MENA boundaries. And there's enough talent and there's enough funding which is available in the MENA region to kind of back this belief. And while I'm here, I do see a lot of entrepreneurs reaching out and feeling that what they build over time can have a great exit, with Angami being an example. And yeah, I personally believe that this region has a huge amount of potential and it is continuing to grow. Whether other SPACs look at MENA as for their targets, I mean, I would definitely encourage that. That's something that will happen for sure.
You just mentioned the entrepreneurs in the region. What good advice, what wisdoms do you have to share with them and also investors here?
I would say I think that they're already doing a great job and they need to continue doing that and have the belief that it's not what they are building, especially on the tech side or younger entrepreneurs, which should not be just confined within the MENA boundaries. It has to go global, like other countries are doing. Like we personally know institutions like Middle East Venture Partners, Shua Capital, De Novo Advisors, and these are our partners in this particular deal. They have kind of helped us to identify as well as to take this opportunity for Ngami public. But there are others as well, and they invest in and advise some very solid businesses, which we are seeing across the entire region. And as investors, our role, I mean, as the people providing that SPAC opportunity, our role is to enable these good companies to become greater probably. And their role is to probably solve these problems and make sure that people like us are able to identify these good targets. So my only advice would be to that they continue to not just look inwards, but actually look at the global, how their brands can become more global. And I think we need to support this region. Clearly, going forward, there's huge amount of opportunity, and external capital will follow sooner or later.